Hello students, seasonal greetings to all of you. So today we are going to work out some few problems in determining whether the transaction will result in increase in working capital or the transaction will result in decrease in the working capital. So student, the first question that we need to solve today, state whether the following transactions result in increase or decrease or do not affect the working capital. A company issued 10,000 shares of rupees 10 each at par fully paid. So what are the two accounts that affects? The two accounts that affects are share capital and the cash. Shares are issued and cash comes. So it's a transaction between non-current and current. As explained earlier, when the transaction involves current item, working capital will not change. If the transaction is between non-current items and non-current items, working capital will not change. So, working capital will change only when the transaction affects between current items and non-current items. So, share capital is a non-current item, cash is a current item, so working capital will change. Now here company issued 10,000 shares of rupees 10 each at par fully paid. It means shares are issued, cash comes. So there is a increase in cash. Shares go, cash comes. So increase in cash. Cash is a current asset. So if cash increases, working capital increases. So answer, there will be an increase in working capital as cash balance will increase. Students, from examination point of view, only if you write the conclusion enough, working notes, further explanations are not required. I have given you the further explanation only for understanding purpose. So if you write only these sentence of conclusion, it's enough from the point of exam. So you should just write there will be an increase in working capital as cash balance will increase. Second one, debentures for rupees 1 lakh are converted into equity share. So debentures is converted into equity share. So what are the two accounts that affects? One is share capital, other is debenture. So debenture becomes share capital. So there will be no change in working capital. Reason, equity share is non-current, debenture is non-current. As said earlier, working capital will change only if it is between current and non-current. Remember this students, a light will glow only if there are two wires, positive and negative. Same way, working capital will change only if the transactions involved are current items and non-current items. But here there is no change in working capital. Reason, equity share capital is non-current, debenture is non-current. So what answer should you write in exam? There will be no change in working capital as transaction involves both non-current. Third point, investments were sold for rupees 50,000. So when investments are sold, investment goes, cash comes. I repeat, investment goes, cash comes. So the transaction affected are two accounts, investment and cash. Investment is a non-current, cash is a current asset. So when investment are sold, cash comes, increase in cash will result in increase in working capital. Students have already explained you before. Increase in current asset, working capital increases. Increase in current liability, working capital decreases. Decrease in current asset, working capital decreases. Decrease in current liability, working capital increases. In short, as explained in the previous session, current assets and working capital, there is a direct relationship. Current liabilities and working capital as an inverse relationship. So increase in cash will result in increase in working capital. So students answer, there will be an increase in working capital as cash balance will increase. Next, building was purchased for rupees 1,50,000. So what are the two transactions, building and cash? The two accounts are building and cash. So building comes, cash goes when you purchase building. So when cash goes, there is a decrease in cash. Working capital will decrease. So answer, there will be a decrease in working capital as cash balance will decrease. So students, the next one, fifth one, bills payable were accepted and issued to creditor. So BP were issued to creditor. So creditor receive, BP goes. The two accounts are creditor account and BP account. So the two accounts are creditor account and BP account. There will be no change in working capital as transaction involves both current items. That means since both are current, creditor is a current liability, BP is a current liability, no change in working capital. As explained earlier, current and current, there will be no change in working capital. BR 10,000 discounted for rupees 9,500. So BR 10,000 is pledged with bank and cash received is 9,500. So 500 rupee is called discount. That is an expense to the business because business has pledged BR with bank. 10,000 BR goes, 9,500 cash comes. So 500 is an expense. So students, there is a decrease in BR of 10,000. There is an increase in cash of rupees 9,500. So BR is a current asset. Cash is a current asset. Both are current asset. But the question is 500. 500 rupee is lost. So there will be a decrease in working capital. Why? Because 10,000 decrease, 9,500 increase. So BR decreases by 10,000, cash increases by 9,500. So net decrease is 500. So students, BR current asset, cash is a current asset, both are current asset, but working capital will change. How? BR decreases by 10,000, cash increases by 9,500, then net decrease is 500. So decrease in current asset will result in decrease in working capital. Fixed assets purchased by issue of shares for rupees 1 lakh. What are the transactions affected here? Fixed assets and shares. So fixed asset comes, shares goes. So fixed asset is a non-current, share is a non-current, 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 no change in working capital. So answer, there will be no change in working capital as transaction involves both non-current item. Next, eighth one students. Cash paid to creditor. So creditor receive cash and cash goes out. The two accounts are creditor account and cash account. So creditor is current liability, cash is a current assets, current, there will be no change in working capital as transaction involves both current items. Ninth one students, preliminary expenses written off 5,000. So when you write off preliminary account expenses, the two accounts are preliminary expenses account and PL account gets affected. So here there is no current items at all, no non-current items, because preliminary expenses is called miscellaneous expenses and losses. In short, we call fictitious asset. There will be no change in working capital as transaction does not affect current item. As explained earlier, students, if the working capital will change only if the transactions are between current and non-current. So both are non-current. Advance income tax paid 5,000. When you pay, cash goes out. An advance income tax is called prepaid tax. It's a current asset. So advance income tax is called current asset. Cash is a current asset. Current. There will be no change in working capital as transaction involves both current item.